So I'm here with my good friend and mortgage agent extraordinaire, Adam Cote. Adam's with Referral Mortgages. He's a mortgage agent with Referral Mortgages, and he's helped hundreds of families secure financing on their biggest investments. Adam, the reason I have you on here today is I want to get an insight into what's happening in the mortgage industry as far as rates, qualifying, and even the term stress test, defining what that is for people out there. So, Adam, brief introduction of yourself, and then I'll get into some questions that I actually prepared, which I may have to put my glasses on because I'm not a young buck like you anymore. So I might have to use the glasses. But tell us a little bit about yourself, Adam.
Sounds good, Paul. I appreciate you having me on. I look forward to answering some of your mortgage questions today. So my name's Adam Cote, as you mentioned, been in the industry for about 8 years now. As you mentioned, we've helped, my teams have helped hundreds of families get financing for homes in Ottawa and surrounding areas. We don't just do Ottawa. Basically, as most people know or might not know, the benefit of a mortgage broker is we deal with over 40 institutions. So we have access to lots of different products, lots of different rates to meet people's situations. So we've got all the bases covered.
And you're dealing with banks and other lenders, correct?
Banks, credit unions, monoline lenders, what we would call basically mortgage-only lenders, alternative lenders, private lenders, construction lenders. We've basically got it covered all. So
using a mortgage broker, you have a lot more options, obviously.
Lots of different options. Our process, I feel, is very streamlined as well too. Responsiveness, which is a big thing. We're not working, quote unquote, what we call banker hours, which are 9 to 5. So as you know, the market is moving at an incredible pace right now. Evenings and weekends are required a lot of times, and our team is really there 24/7 to assist people. So it's an awesome benefit, especially in a market that's moving at this pace.
Well, I can toot your horn a little bit because I can tell you my team uses you religiously, and the one thing they say about you is response time is number one. So that's awesome. We appreciate that, Adam. All right, let's get into some questions that I've prepared for you that I know there's a lot of people would love to have answers to this. First of all, let's talk about rates. I mean, what's your forecast for the short term as well as the medium term?
Right, that's a great question, Paul. I mean, the forecast is very simple. Rates are going up. They've already been going up, and that's a bit of a misconception that I think you and I had talked about before in the past, is that the bottom line is since about this time last year, fixed rates have continuously gone up because the bond market's gone up, and the fixed rates are really based on bonds. They have gone up basically over the past 12 months, about a full percentage point. So the variable rates are still low, and that's a great tool for some people to get into the market and have low payments for the short term. However, the Bank of Canada did mention in their last meeting in January that we will be looking at a more than certain increase here in their next meet, which is March 2nd. So that's not far away. So what we're anticipating there is basically about a 1/4 percentage point increase, which would amount to the prime rate, which affects basically variable mortgages, lines of credit, things like that. Unsecured lines of credit could go up 0.25% to start. And then that will probably be off to the races at that point, because a lot of economists are predicting anywhere between 3 to potentially even up to 6 rate hikes in the next 12 months.
Wow. I mean, as of now, the difference between a fixed and a variable right now is quite big. But you think with between 3 and 6 rate hikes, we're going to be similar to where a fixed rate mortgage is eventually.
Exactly. And that's exactly the conundrum that people face right now. People talk to us a lot about, should I go fixed? Should I go variable? And to be totally honest with you, that's entirely dependent on someone's situation. But the bottom line is that rates are still low, historically low right now. And people say, well, what happened to the 1.8% fixed, 1.7% fixed? That's in the past. That was a year ago. That was due to COVID. We are looking at significant increases going forward, and really rates going back into a normal range somewhere before, probably between the 3 to 4% mark.
Okay. Well, with rates rising, I mean, is it a good time to get into the market right now? I mean, should people be looking to buy now?
That's a great question, Paul. So the issue with rates rising is not just that clients are going to be looking at increased payments on their home, mortgage payments on their home. But you brought this up at the beginning of kind of the introduction a little bit here in the stress test. And that's something that I believe that not a lot of people are familiar with, especially the first time home buyers. They hear the term stress test and, benchmark rate and all that. But basically the stress test is a qualifying guideline that we have to use for mortgages with your traditional A lenders in Canada that require us to qualify people at the greater of the benchmark rate, which is currently at 5.25%, or the contract rate, so the mortgage rate a client would be getting plus 2%. Now, currently with where rates are at, the 5.25% is really where we're qualifying people. However, to give you an example, if, the fixed rates on the uninsurable mortgage side are around 3%, in the low 3%, if that continues to go up to 3.5%, at that point, 3.5 plus 2% would trip us over that 5.25 benchmark rate and bring us into 5.5% territory. So as soon as that happens, not only are you paying more for your mortgage, but your purchasing power has also been diluted as well too, because you have to qualify at a higher rate, which means you can afford less of a home. So it's not just about rates going up. Rates are going to go up. The question is like, are rates going to go up? Yes, they're going up. They're going to continue to go up in the short to medium term. It really becomes, with the rate increases, are you going to be priced out of a certain segment of home? Are you going to be able to, all of a sudden, if the benchmark rate goes up, because that's something that's on the table too, where that could increase in the next 4 to 5, 6 months. It happened last June, right? The benchmark rate went up last June into 5.25, and overnight, once that happened, people's purchasing power went down anywhere between kind of 4, 5, 6, 7, 8%. That might not seem like much, but with home prices right now, that makes a difference between getting the end unit townhome and the middle unit, or the single family home and the end unit, right? So and then you're going to have increased payments going forward as well.
So before I get to my next question, because I know you so well, what are you wearing besides that dress shirt right now? Do you have shorts on or underwear, or do you actually have pants on?
So Paul, I'm in my home office right now. So I'm business up top, party down low. So
Oh, you're in underwear.
I noticed you're in your office, so you probably have pants on, but I indeed have shorts on. So and I noticed you got the nice blazer on there with the old pocket square. I think you're dressed very much like an office casual Adam Cote.
Well, this is the Cote look. This is why I'm wearing this. It's the Cote look.
I was gonna say that might be my blazer. So
yeah. So listen, we talk about the benchmark and the contract rate. This sounds like it's going to really impact first-time home buyers. Is that the segment of the market that's really going to be impacted by this?
Yeah, it's going to impact everyone, but primarily the first-time home buyers are going to feel the pinch the most, and that will be because not only will you have increased costs, more stringent qualifying power, but it's very hard with the way prices are going right now for first-time home buyers to get into the market. I mean, if you are a single income earner making 75,000 a year at a university, and you don't have the bank of mom and dad, or you don't have the co-signer option, then it's even very hard to get a condo right now with where prices are going. And we're looking at basically a repeat, in our opinion, in our analysis of the market, of exactly what happened between January and July of last year, because the prices went up crazy. And not only did the prices go up crazy, but OSFI increased the benchmark qualifying rate last year in June, I believe is the beginning of June. So when that happened, we're looking at a repeat of that. And we've had clients last year that said, oh, I'm buying now. I should have bought last January, February, March. I would have qualified for more home. I would have been able to lock in a lower rate for 5 years, which is hugely important for first-time home buyers, right? Like, they're already having to shop at the top end of their budget. So locking in low payments for 5 years to make sure home ownership is affordable for them is critical right now. Like, you can't almost, I hate to say this, but you can't put a price on that, right?
Well, it's funny you say this as a repeat of 2021 from Jan to July. I've been screaming that on my radio show, that this is now, we're in the same what we were in 2021, but potentially even more insane than where we were in 2021. As we're seeing the prices do this, and we're seeing the mortgage rates do this, the read between the lines you're telling me right now is buy now, get rates now.
Absolutely. And that's the same message that we have to clients too, right? And people are trying to wait for the sky to fall out. And the bottom line is, the numbers have shown us that the market in Ottawa has been steadily increasing every year for the past 20 years, albeit some years have been better than others for sure, but it's been increasing, and qualifying is not getting any easier, because the policymakers want to ensure that when you qualify for a mortgage now with increased potential mortgage rates, significantly higher, maybe in 5 years, that you're going to be able to qualify for those new higher rates. And they're going to change the guidelines to make sure that, you can do that, so that there's no defaults on mortgages, so that, the housing market stays strong in Ottawa, and people's biggest investment for 99% of people is protected.
Yeah, no, I agree with that. All right. Showing my age right now, I need to read my last question, and I can't read it without putting my glasses on. Okay, so give me some tips for people looking to buy or sell this spring. 2 or 3 tips, what they need to do in this competitive market to get into the market.
So that's a great question, Paul. There's a few different things. First of all, pre-approval is paramount. The market is moving at an extremely quick pace right now, and you need to have all your financial house in order. You need to have your pre-approval done. And I'm not talking about pre-qualifying, filling out an app online with a bank that spits out a random number. There's a lot that goes into qualifying. And when you find that right place and you want to make an offer, you need to be as competitive as possible. So when we talk about doing a proper pre-approval, that's filling out an application, that's submitting income documentation, that's going through the credit check process, that's verifying your down payment, all of that. Most people are shopping right now at the absolute top end of their budget, right, with where home prices have gone. So things like property taxes or condo fees on a specific property can impact purchasing power dramatically. So we want to make sure that when we know that when you're going in to offer on a place, we're running the hard numbers on a property, and we know your absolute top limit, because sometimes it might be $300, $400, $2,500 that makes all the difference between you getting the home and not. Okay.
Yeah.
Another thing with, and this is specifically more for first-time home buyers, you still have access to RSPs up to $35,000 tax-free. Co-signing is becoming hugely popular right now, especially for first-time home buyers, or gifted down payment, again, from that immediate family member that wants to help their kids get into the market so they're not getting priced out and they can start building equity in their home. Another option too, and this is not an option that banks have, is and this is becoming hugely popular, is the alternative lending space. There are products out there right now where you could get a comparable interest rate anywhere from 1 to 5 years, comparable with your A banks, your credit unions, whatever. And we can qualify you at the contract rate with that. Now, the only caveat to this is that you need to have 20% down. But in a lot of cases, first-time home buyers that, parents are giving, instead of waiting until, they kick the can or whatever, they're giving their kids the money so they can get into the market early. And if you have that, you can get into the single family home maybe right away, because we can qualify you for significantly higher purchasing power. And then what happens once that term is up, we can roll you over to a traditional lender at that point. So this is something that mortgage agents and brokers have access to, which was hugely popular in Toronto with where the housing prices have gone. We're seeing it more and more in Ottawa right now, and more people are inquiring about it. Again, the interest rate's comparable. The only difference is you typically see a lending fee that they require of anywhere between 1 to 1.5%. But we've helped clients to say, hey, we have the down payment. We want to start a family. We don't want to be in a condo to start. We want the townhouse. We want to move in right away. We can afford the payments. We've been able to help them get into that right away using the contract rate. So that's, or extended debt servicing ratio. So that's a huge benefit. And I think that going forward, Paul, that's going to be something that a lot of people, if they have that 20% down, should really look into.
Yeah, no, that's awesome. That's awesome. Before we end here, Adam, one thing I'd like to say is I've been in your den, in your basement, and I don't see a Tom Brady picture anywhere. Where's the Tom Brady picture?
No, there's no Tom Brady. This is this man cave is, it's all my sports memorabilia. It's my office. It's my gym down the hall. But we really are, Bills Mafia here. So there's no Tom Brady. There's no Patriots. There's no Buccaneers. There's none of that stuff here. You're not going to see any of that down here. That's for sure.
Bills Mafia. They do have a good CFL team. They really do.
Yeah. Well, you know what? We're number 2 in the power rankings next year, Paul. So I don't know where your Buccaneers or Patriots or whichever team you're cheering for next year is, but I think we look pretty good.
All right, buddy. Thanks for your insight into the market. We really appreciate it. My team really appreciates you. You do so much work with us, and you do such a great job making sure that your response time's awesome, the service is awesome, and we appreciate that. Where could people get a hold of you?
So very simply, it's easy to get a hold of me. If you don't have Google, search my name, Adam Cote Mortgages. You can get a hold of me directly on my direct line. It's 613-864-9577. or you can email me at adam@referralmortgages.com. And I want to say, Paul, it's been a pleasure. It's nice to have you on, talk mortgages, rib each other a little bit. We kept it PC though for our viewers out there, so it's not as bad as it usually is. But your team is awesome. Always a pleasure to work with it, and a team that I highly recommend out there for sure for real estate services. And I appreciate you having me on.
Awesome, buddy. Thanks again, man.